right, the scope of UPI increases with the news of credit line being introduced with it. Credit line on UPI still remains in trial phase, but the news says that post this launch, credit cards won't be invoked. Now, how true is it, and how will this new feature on UPI work? Is it a loan that you can take on UPI at what interest rate and for what duration, and how safe are you when transacting like this? Let's decode all of this with Yashwant Lodha, co-founder, PayNearby and Ritesh Bhatia, Cybercrime Investigator and Cybersecurity Consultant. Good evening and welcome both of you. Yashwant, I really want to understand what kind of a feature on UPI we're talking about. Will this actually replace credit cards, or just the multiple use of credit cards would be replaced?
Thank you for having me. What credit line on UPI does is basically allow you to take a loan from the bank and then spend it via UPI, which today is not possible, right? One form of doing that today is by taking a credit card, which essentially is a credit line in a card factor. The benefit of having a credit line on UPI is that the issuance cost of a loan, by virtue of the fact that there is a cost of card, sending the card cost, all of those costs become irrelevant in this scenario. You can apply to a bank, get a normal loan, link that loan to your UPI handle and on any of the popular UPI apps, and start using it to pay money. It will create a scenario where loans will not be used only for large ticket items as it is generally done today, large purchase, personal expense like a wedding, marriage, and so on. But it can also be used to buy day-to-day groceries in a very with just as much ease as you are doing it with bank accounts today. Credit cards will continue to have their own relevance because credit cards, in fact, there are many purpose-specific credit cards where if you have a particular card, you get more points and rewards on purchasing flight tickets, or maybe on a movie ticket, or maybe on fuel cards and fuel pumps, and so on. Those purpose-specific cards will continue to remain relevant. And even the general purpose cards, because they have a lot of rewards, will continue to remain relevant. It is not a replacement, but an add-on facility of utilizing a different form of credit in the easiest manner that we all know today, which is UPI.
Let's break this down. Let's break the procedure down. For example, if a UPI existing customer wants this credit line to be introduced on their service, they need to approach the bank. Okay, you need to submit some kind of documents. The bank will assess your eligibility for this credit, and then you are able to use it on a UPI. The question I'm asking over here is what kind of documents first? How will the bank analyze your eligibility? And then the loan that you're taking, this will be reflected where? In what kind of account?
So what happens is that in a credit line scenario, right, while you may need, it's like a normal personal loan that you take today. You provide certain documents. Many of you today will probably have a personal loan approved in your mobile banking application, which you can go to your mobile banking application, get it enabled in a single click. And no additional documentation may be required. So for example, today, I can go into my mobile banking app and get a loan for 3 lakh rupees today as a credit line. Now, imagine if on a single tap, such a loan is enabled, and in your UPI application, you can link a loan, just like today you link a bank account. That will enable it. It will become that simple. You may not necessarily even need to visit a physical bank branch to get this loan enabled. I foresee a scenario where a lot of such credit will be dispensed on the phone itself, and it will be a revolutionary manner in how credit is dispensed. The documentation will be standard as it is for a normal loan, but the dispensation will be in a matter of minutes. Enabling UPI on a credit line is something what people are seeing is just as payment, but I think it's a revolution. It will bring a revolution in terms of how people get credit also as easily.
The entire scenario where the trend and the nature of credit being dispensed is changing. This is definitely going to be a revolution on its own. But then I also want to understand, is there any clarity as to for what tenure and what interest rate will you be taking this loan on via UPI?
Guidelines around it. What we understand is that it's be a normal credit line that is available to you today also. The loan's tenure may be shorter from 4 to 6 months. To longer term tenures also, depending upon your eligibility with the bank, the kind of documentation you're allowed. There's no specific guidelines for this or restrictions for this.
Sure. I have more questions for you, but then I really need to switch to Ritesh now to understand the cybersecurity angle for it, because just as we are witnessing, Ritesh, every time there's a new technology, there is a new kind of scam or a hack introduced. Okay, how safe are we while transacting through UPI and now taking credit on a credit line on UPI?
Kavita, firstly, many thanks for inviting me and for doing this particular part of segment related to UPI and credit cards, I would say. Now, the thing is, safety and cyber doesn't go hand in hand. Wherever there is cyber, wherever there is technology, the hacks are always going to be there. But yeah, we can just minimize the impact of it, or we can just delay what is going to happen as such. So if you see, as of now, also there have been certain frauds happening via UPI. When they ask you for your UPI ID and the PIN, they social engineer you through some sort of phishing, and then they take your details as such, and then they register that particular thing on their phone as such. I am talking about the criminals who now what will happen now with this particular credit line, or now with the credit card based UPI. So your credit card is already like linked to the UPI. Now you're making a payment, and you have an option, like for example, right now it goes through the bank. You also have an option, like you have a UPI Lite, wherein like up to 2,000 rupees, up to 500 rupees, and maximum 2,000, you can just like make certain payments and all. And now you have this UPI credit card kind of a thing. Now you already have a good amount of, let's say 3 lakhs or 5 lakhs, as you guys were discussing now. So the chances are, where in your bank account, in your savings account, there would be just, let's say for some person, let's look at somebody who's earning around about 40,000-50,000 rupees. He would be having just somewhere around 20,000-25,000 rupees in his bank, or even lesser towards the end of the month. But here he's got a big credit line of around about 3 lakhs or 5 lakhs already there. And this is how it can be kind of siphoned off. And that's the reason, we really need to be extremely careful. Do we really have to link it or not? Will be the question, Kavita.
Ritesh, so far, what kind of scams are we looking at when we talk about UPI or using a UPI for any banking transaction or work?
There are two types. One is where unknowingly people are sharing certain information, and because of it, the UPI gets registered somewhere else. The second type is wherein the person is like in such a situation wherein, we've always been doing shows, and I always end up telling people that, look, let's just pause and have zero trust, and then verify and then do whatever we want to do. Right? We've always been talking about this, Kavita. But now what will happen? Let's say he's already being fooled. He's already being scammed. He won't have the time right now to pause and verify and other kind of things, because what happens is, up till now, like just yesterday, I received a message from a victim who said, like, look, I ended up paying 4 lakh rupees through my UPI, out of which 2 lakhs was already there in my account, and another 2 lakhs I had to take a loan. So what happens is, after that particular thing, he got some time to think about it. Oh, look, yeah, means, after giving up the money, this could have been a scam. Over here, whatever money he's got through the UPI, plus along with the credit line. So let's say 50,000 in the bank account, 3 lakhs of the UPI credit limit, and this is how it will go away. So he's not going to get time to pause and think and then verify, and so a lot of money will go away. So there are these two kind of scams. Number one, where your phone number and where your UPI is being registered on another device and being misused. And the second is where you're already being scammed, and you are yourself making some payments. But first you could make limited payments, but now you also have this credit kind of thing with you, Kavita.
All right, so a lot of things that a user need to note down. But then, so earlier, Yashwant, you said that this will really not impact the use of credit cards. But how do you think it's getting credit cards and UPI credit line on the same pedestal? Let's also look at the kind of add-on features you get on credit card. Let's also look at the repayment strategy and the flexibility that you get, on a credit card. Do you think all these features might also be introduced on UPI credit line so that it becomes more attractive? Because we are seeing UPI being, one of the favorite mode of transaction. Not talking about urban India, but then even tier 2 and tier 3.
Understand that today credit card market in India is about 3.5 crore credit cards, right? it's a fully unsecured mode of lending today for banks. But credit lines, while I said 3 lakhs, 5 lakhs, but banks, as credit becomes more democratized and as underwriting becomes more automated, what will happen is small credit lines for 5,000, 10,000 will also start getting dispensed. The other very important problem is that MasterCard and Visa, a lot of whom have issued credit cards in the market today, are still not on the UPI platform. Hence, the need for credit line is important. Like I said, credit cards have their own benefits in terms of rewards, but imagine a bank based on other, say, an FD or some kind of a deposit or a security against which I can get a credit line, which I would be able to use on UPI, which will not be available in a credit card scenario. There will be other scenarios now. Can rewards get introduced into the for credit lines? I think it's a matter of time when before which such incentives or such hooks are created, even on credit lines, which are not a traditional credit card, but works similar in a manner of credit card for consumers to start opting for credit lines over and above credit cards.
Yashwant, also one more thing, whenever you take a loan, this also, and if you really miss out the repayment or any payment, it impacts your credit scores also. You think the credit bureau agencies would now be tracking your credit line via UPI? Will that also come under your radar?
So credit lines in and of itself will be part of what credit bureaus will track. It has nothing to do specifically with the fact that whether it is used via UPI or not. Credit line is like a normal loan to the extent that you should be eligible to get it. You should use it responsibly, and any delay or missing repayments will likely impact your credit scores. I don't think that has anything to do with UPI in itself, is what I'll say. So people who use credit line for the ease of using it via UPI should also take credit lines and repay them back responsibly.
Strategy has to be there even before taking any sort of loan. But also, how do you think the bank would decide on the credit limit that an individual can have?
So credit limits will, I think, and we're already seeing a structural shift in how credit is getting dispensed. For example, we'll start seeing, we are already seeing smaller ticket loans of even 10,000, 5,000 rupees now being dispensed via many banks and NBFCs in a fully automated manner. So the limits will be decided on multiple elements. We may also see cash flow based lending. We will see the relationship of the bank and that customer pre-existing. I may have a savings account with the bank and have continuous relationship for the bank to be able to pre-approve a loan for me. There could be certain securities that I may put. I think that will be dependent on how banks and each bank wants to construct their credit line business. But a lot of innovation will be seen, and it will not be restricted to just large ticket loans. It will lead to more democratization of credit, something that credit cards by itself has not been able to solve yet in India.
Ritesh, the use of credit card and the scams and hacks that you come across and credit line on UPI, what would be your 5 thumb rules on the usage of these both mediums for credit?
Oh, so I would say as far as the credit card is concerned, like number one, in the UPI itself, you have a particular PIN. Make sure that PIN is not like really the same as PIN as when you get the, RuPay credit card. Like I have a RuPay credit card from HDFC Bank, and the PIN that I use over there is actually different from the PIN over here. So that's one. Second thing is make sure that you set the limits. Now, this is like whether it's our UPI card or any other card, it doesn't matter. I mean, the RuPay credit card or any other card, we need to set limits. Please disable international transactions if you aren't doing over there. Many banks give you many features of customizing, whether you do an international online transaction or internationally ATM. So if you're, let's say you do online transactions internationally, like let's say making payments to Apple and other kind of things. So, just set the limit to 1,000, 2,000, 5,000 and disable the other ones. Same way with the domestic transactions. So these are the things. The third thumb rule would be, please don't take a photograph of it, a picture of it, and keep it in your phone gallery. And that's how when the loan app scams happen, they had access to many information. Along with the identity cards, they also had the information about what all kind of cards you're using. So I think overall, these are the 3-4 things that you really need to take care of.
Right. So these are the things very important to note down if you're using or you will be using Credit Line on UPI. Thank you so much, both of you, for being on the show and helping our viewers with this today. Thank you. And we move on. Welcome back. You're watching The Money Show with me, Kavita Thaplial, and let's talk about investing in US bonds. How can you invest in US bonds, and is there a better opportunity than Indian debt options or fixed income options? How can you strategize your fixed income strategy via US bonds? Let's understand all of this. I have with me Akhil Mittal, Senior Fund Manager, Fixed Income, Tata Asset Management. Akhil, good evening and welcome to the show. Clearly, investing in US bonds for the purpose of diversification can sound like a very interesting idea. But then so far, I just want you to help our viewers first with the entire trajectory, that the US bonds are falling into or getting into, looking at the interest rate scenario. Do you think it's a good time to lock your money in these kind of investment avenues right now?
Sure. Thanks, Kavita, for having us. So broadly on the interest rate trajectory side, see, worldwide, what we have seen is from 2022 onwards, central banks have been pushing rates higher, and hence, the bond yields everywhere worldwide have gone higher. In US, more so because we saw very sharp rate hikes by Federal Reserve, which led to sell-off in yields also. As of now, as we speak, US two-year bond trades around 5%. If you have to compare where it was 2 years ago, it was like 0.5%. So that's the kind of move that we have seen. Now, going forward, the way we see it is, all central banks worldwide are committed to inflation. So has Federal Reserve also said that, they will fight against the inflation till the last drop, till it comes back into their zone of 2%. So I think it's a long story. Rates. We might not see many rate hikes going forward, if any. We might see the yields or the rates remaining elevated for a longer period of time. So that's my sense on at least next 6 months to 9 months. Maybe after 1 year, after inflation starts falling, which it will, inflation has a statistical movement also. So post a year, inflation will start falling. You will start seeing yields coming down. You will start see central banks cutting rates, but that's some time away. So that's how the yield curve or the interest rates are poised as of now. If you ask me longer term, yes, I think these elevated interest rates are worth buying today because globally you will not see these interest rates 2, 3, or 5 years down the line. So it makes sense to buy interest rates right now, especially if you talk about US. The recency effect of last 15 years. Now US primary, if we see from 2008 till 2020, is those zero interest rate and tons of money printed post the global financial crisis. So 12, 13 years of easy money, cheap money is good long enough time period to believe that this is permanency, but actually it is not. So if you see pre-GFC, where were the interest rates, and now where the interest rates, they are largely similar. And central banks will win the fight against inflation, and then you will have interest rates coming down. So yes, it's a good time to buy. US has faced more brunt of rate hikes purely because the inflation went up more than what many central banks or more than what markets had anticipated. So that's one thing. Coming to whether how are they compared to India, or how can one look to invest in them? I think they are a good diversification option, given that US dollar is and will continue to remain the central currency of the world for a longish period of time. Elevated interest rates do present a kind of a viable opportunity, which is at par with emerging market interest rates if you adjust for depreciation of currencies against dollars. So yes, these are opportunity windows which come seldom and which come after a long period of time. So yes, they do provide a very good diversification option as well.
So again, one more thing. What's the duration that you're talking about if one wants to lock in their money in US bonds? You are looking at a long-term duration?
I would say one should look at long-term duration because, let's say a 1-2 year at 5% or a 10 year at 4.60. I would definitely go in for a 5-10 year kind of duration because, it's kind of unheard rates. Once your inflation comes down, your rates start falling. You will not have these interest rates. So basically, if you are invested for shorter duration, down the line, few years, you risk your reinvestment, because if interest rates are lower, then you invest at a lower interest rate, then reinvest your money. So yes, one should look at higher duration now. So, but of course, matching of your money requirement, your money objective is going to be the key factor. But if
Park in for
permitted,
long
if time
term,
permits,
Akhil, if we park in for long term, what kind of volatility also are we looking at involved in it?
there will be some volatility over next period of next 3 to 6 months. So I will not, I would say one has to be mentally prepared for another 20, 30 basis points of yields going up, inching up from here, but that would largely be a temporary. Now that can happen over next 3 to 6 months, but what I can surely say is post 6 months, you're not going to see volatility. If anything, volatility is going to work in the favor and not against you. So yes, one can, one has to be mentally prepared for next 3 6 months of volatility. It is like, cusp cycle, and all cusp cycles historically are embedded with volatility. These are the times when you can buy cheap, but these are also the times when you have to bear a little bit of volatility. So yes, 25 30 basis points of volatility can come, but one has to live with those, because you can never time the bottoms or the tops in interest rates. Maybe these are the tops, maybe another 20
So, Akhil,
basis
it
points,
makes
25.
sense to just stay put in it. Just put your money, just park it over there and leave it till the end of your
Absolutely.
duration. Because
Absolutely.
because if you come out of that investment before the tenure, that's a time you might just incur some loss.
That's the time when you have to again decide on the alternate use of money, right? Either you have a consumption, well and good. Otherwise, yes, most likely after 2 3 years you will make decent returns, make good money. But in near term, if you see, if you want to time it, you invest now and you want to come out after 3 months, then volatility can hit you. But if you have a longish time period, yes, you can stay invested easily. You'll most likely not incur any losses. On the contrary, you will make decent gains.
What's the mode of investment that you would recommend?
See, as of now, there are two ways to invest in US bonds. One is you can go through ETFs. There are many ETFs that have investments that invest in US bonds across duration. So you will have up to 1 year curve, 2 to 3 year curve, 3 to 7 year curve, 10 year curve. So you can pick and choose the ETFs. There are many platforms that provide these ETFs. You can match your maturity duration and invest. Other route is the LRS, where you can take the $250,000 out every year, and then you can go ahead and buy it. So these are the only two options available as of now. Most of the investors, financial investors, use the ETF.
Okay. Now let's talk about an entire fixed income portfolio for an investor, where they want to put money in US bonds and also look at Indian fixed income option. How do you design this portfolio to avoid over diversification in fixed income?
So idea is simple. I would say I would assume if you are an Indian and living in India, most of your businesses in India and incomes and expenditures are in India, you could look to diversify 10 to 15% of your fixed income allocation in dollar for now. Maximum 20, don't go beyond that. And within that also, you need to overall have a duration limit in your mind. So your duration limit could be X, or let's say for hypothetically a 5 year duration, then you can choose products within India and US bonds. So in India also, then you will have different points of yield curve. As of now, the yield curve structure is absolutely flat. So 1 year, 2 year, 3 year, 5 year, 7 year, 10 year, everything is flat. But the point you have to keep in mind is what happens when you take out the money. You will have to reinvest that money. So my sense is around 15% in US bonds, 85% in India, within India and US. 50% of your money should be longish duration, around 40% should be medium duration. Only 10% of the money, or the money which you think you will require in next 3 6 months, 1 year, that is the money that can remain in shorter duration. Thus everything has to be medium to long duration.
Right, I think that will be all. Thank you so much, Akhil, for being on the show and helping our viewers with every aspect of designing their fixed income portfolio, whether through Indian avenues or US. Thank you so much.
Thank you.
On that note, we slip into a short break, but then post that, we'll be having our viewers joining in and asking their financial portfolio queries to Himant Tustuki today. Welcome back. You're watching The Money Show with me, Kavita Thapliyal. There are a plethora of funds available in the market to invest your hard-earned money in, but how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? Today we have Hemant Ustigi, Wise Invest Private Limited. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on themoneyShow@etnow.tv. Good evening, Hemant, and welcome to the show. We have our first viewer on the phone line, Venkat from Hyderabad. Hi, good evening. How are you doing?
Fine, doing good. Thank you.
Thank you so much for sending us your question. All right, so you want to decide as to what kind of category should be given, what kind of exposure in the portfolio?
No, that is not the question what I asked for actually. I heard one of your program where you were asking there is an allocation of each fund, but however like a multi-cap in which already mid-cap is there and small cap is there. So when we decide on the overall portfolio, do we need to count those inherent allocation of these multiple example, small cap, we have to count that also when we decide on that overall portfolio or not? Or we need to count only like small cap fund separately, mid cap fund separately, because multi cap is having all, no? That is the doubt I have.
All right. Hemant, how would you look at this question?
Well, Kavita, I think Venkat has asked a very, very important question. We all know that equity plays an important role in any long-term investor's portfolio because that's only asset class that can help you beat inflation. But considering the fact that equity is an aggressive asset class, it's very, very important to keep an eye on what kind of allocation you have for different market segments, that's large cap, mid cap, and small cap. Obviously, the key is how much you allocate in the beginning and how much you allow it to deviate over a period of time. For example, the allocation for 5 to 10 years horizon will be different compared to someone who is investing for 15, 20 years. How do you keep a track of exposure to different market segments? As Venkat asked, look, there are certain funds which are investing in a particular segment, okay, which could be a pure large cap fund, pure mid cap fund, pure small cap fund. Then there are different categories like flexi cap, large and mid, multi cap. Now in multi cap, we know that minimum exposure to each asset class has to be 25%. So if I were to look at as an investor as to how much exposure I have and how do I keep track of that, I need to look it across the portfolio. Now, for example, if I'm investing in a small cap fund, a small cap doesn't mean that it will be 100% small cap. You will invariably see that some of the small cap funds are also investing 10 to 15% in large cap and mid cap. Similarly, a flexi cap, while there is a flexibility to the fund manager to decide how much he wants to allocate to different market segments, invariably you'll find that there is a strong bias towards the large cap. So you need to look at all funds put together because that can make a significant difference. For example, if you're looking at only fund which is investing in a segment and you leave out others, you will see a significant variation. And it's very easy to get this information. It's available on the facts sheets of the mutual funds. You can look at the mutual fund website. There are platforms where this information is available. So I think it's important to look at across. And if you're actually, using a particular site for portfolio updation, the moment you upload all the details of your portfolio, you will actually get to know how much allocation is there for each segment. So no, you have to look at all funds across the portfolio to get a fix on how much exposure is there for different market segments.
All right, Venkat, is there anything else you want to ask Hemant?
Defines my issue actually. Thank you very much for addressing this.
All the best. We move on. Second question is again from Hyderabad, Padmavati. Do I have Padmavati on the phone line? Okay, we move on, but we have a question. So she's investing in Canara Bank emerging equity. She has Parag Parikh Flexi Cap, Axis Mid Cap, SBI Blue Chip, ICICI Pro Blue Chip, DSP Equity Opportunities, Kotak Emerging Equities, and she's been investing since last 5 years. And she wants to know if she can continue her investment in these funds, and in case any changes are needed, what would that be?
Well, Kavita, the time horizon is, I think, overall 10 years. 5 years she's already completed. She has another 5 years to go. So I think investing in equity fund is certainly a good idea. But there are 7 funds for 14,000. So I believe that there is a scope to consolidate the portfolio, which means reduce the number of funds but ensure that there is a proper allocation to different market segments. So some of the funds can be retained, some of the funds maybe she can consider stopping SIP there. So in pre-existing fund, maybe she can reallocate the amount. For example, you have Parag Parek Flexi Cap, she can allocate 4,000 there. Then Kotak Emerging allocation can be 4,000. ICICI Blue Chip, the allocation can be 3,000. And I would recommend adding one large and mid cap fund, which is SDFC large and mid cap, and investing 3,000 in that. So in all, 4 funds, 3 existing funds, but with reallocation of amount, and one new fund, SDFC large and mid cap with 3,000 allocation.
All right, we move on. Let's take Lokesh Raja's question, and he's doing SIPs in 5 funds, 2,000 each. Axis Blue Chip, Axis Small Cap, Kotak Emerging Equity, Parag Parek Flexi Cap, HDFC Small Cap. It's almost 50,000 per month, and for 10 years he wants to invest. The aim is to accumulate corpus of 10 crores with this portfolio.
Get to the target within this time horizon. So I think broadly the expected corpus would be around 1 crore 20 lakhs. So clearly if he wants to achieve the target, he has to actually increase his SIP to almost 8 lakh per month. So I think there's a big gap in how much he's investing and how much he wants to achieve through this investment. A couple of changes in the portfolio I think will be better for his portfolio. There are 2 small cap funds. So my recommendation would be to retain 1 small cap, which is HDFC small cap. And the other one is Axis small cap. Maybe you can consider looking at 1 multi-cap fund, which could be Nippon multi-cap. And then there is also Axis Blue Chip. And there is also, Parag Parek Flexi Cap. So, my belief is that the money which is being invested in the Blue Chip fund can also be reallocated to Flexi Cap fund. I think that bring out the better balance, and there is better flexibility in terms of rebalancing allocation to different markets. And so I think a couple of changes in the portfolio. And as I said, there is a gap in how much he will be able to accumulate and how much he wants to accumulate.
Arun from Mumbai is on the phone line. Hi, good evening, Arun. How are you doing?
Hi, good. Kavita, how are you?
I'm doing good, thank you. You can tell us your fund details?
Sure.
Portfolio details.
So, good evening, sir. So I have 5 SIP that I do. All of them 5 are into growth type. One is Axis Blue Chip Fund, Axis Mid Cap Fund, Canara Robeco Emerging Equities Fund, SBI Small Cap Fund, and Nippon India. So Nippon India, I'm doing 3,000 per month as SIP, and the rest other 4 I'm doing 5,000 per month as SIP. So I'm looking at a corpus of around 3 to 4 crores in next maybe 15 years or so. So is the alignment in line?
How long are you investing?
So I've been investing for around 5 years now.
Okay, and you've been increasing your SIP amount, or it's the same?
Not yet. Not yet. I have not yet done. I know it is in the pipeline.
Oh, so in 5 years you have not increased your SIP amount?
No, not yet.
Okay,
yes, not.
okay. All right, so let's figure out if you can achieve the corpus of 3 to 4 crores via this portfolio, but you might have to increase your investment amount because your time duration is almost 15 years, it seems. Hemant, what do you recommend?
Well, I think 2 important things. One, he's been investing for the last 5 years. Obviously, he's accumulated some corpus. Another around 15, 16 years to go. So my thing is that I think in terms of calculation, he should be able to achieve the target of around 3 crore. Since he's mentioned 3 to 4 crores, if he's looking to accumulate a corpus of 4 crore, maybe then he needs to kind of add another 7,000 rupees to his SIP. So it should be around 30,000. And one simple way to do that is also to step up your SIP every year. If you can do that by 10%, actually, you can then accumulate a much larger corpus. A couple of changes, I believe, because as I mentioned while answering the earlier query, that it's important to invest in a manner that there is more flexibility in terms of rebalancing allocation to different market segments by the fund manager rather than you trying to replicate what the fund manager does. So a couple of changes I would recommend here. There is Axis Blue Chip, Axis Mid Cap, and Canara Robeco Emerging, where it's investing 5,000 each. My recommendation would be to stop these 3 SIP and then look at HDFC Large and Mid Cap at 7,000 and Kotak Multi Cap at 8,000. So 2 funds in place of 3, but different categories, which will give you the flexibility and maybe better performance over a longer period.
All right. Arun, is there anything else you want to ask?
No, thank you very much for guiding, sir. Thank you.
All the best.
Thank you,
We move on. Lakshmanan from Bangalore. And he's been investing in Axis long-term equity since 2014, and he wants to know if he can switch from this fund to Axis long-time savings.
Well, Kavita, I'm not too sure whether the name that he has mentioned where he wants to switch in is the correct name. But as far as the Axis long-term equity is concerned, it's an ELSS fund. It hasn't been doing well over the last couple of years. So definitely, if he has completed his mandatory lock-in period, he can definitely consider, switching that money elsewhere. So if the time horizon allows him to remain in an equity, maybe he can look at Axis Growth Opportunity Fund. Maybe that's a better option. Maybe it's a large and mid-cap fund, and also investing some amount in US markets. So within Axis. But if he already has a couple of other funds in the portfolio, which are good quality funds, maybe then he can move that money to some other fund. But the name that he has mentioned, it doesn't seem to be the correct name.
All right, we move on. We have Rahul Sharma on the phone line with us from Chennai. Rahul, good evening. How are you doing today?
Hi, I'm good. How are you?
Doing good. Thank you so much. So you have started investing in Nippon Small Cap, HDFC Multi Cap. You have Axis Small Cap, SBI Contra, ICICI Pru Small Cap, and you want to generate 2 crores in 15 years.
3 crores. 3 crores after 15 years.
3 crores. Okay. Are you willing to increase your SIP amount?
Yes.
And you've been investing since how long?
Actually, one year before.
All right. And okay. And who recommended these funds to you?
It's on my will only.
Okay. This is a slightly very aggressive portfolio looking at the kind of market cap you have in your portfolio, but we'll sort this out for you. Hemant, do you think there's a lot of risk involved in the kind of placements he's done?
Yes, I mean, a good thing is that he's investing for the long term, so he has time on hand. But I think the composition is equally important. We did discuss that earlier. But here, I think almost 20,000 rupees is being invested in the small cap fund, which I think is very, very aggressive. But good thing is that he has some good quality funds in his portfolio. First, let me just mention about his target. With the current investment, he should be able to get around 1.5 crore. If his target is, let's say, 2 crore, then maybe he needs to add 9,000. But if it is 3 crore, obviously, then the right thing would be maybe if he can do step up SIP maybe by 10%, he should be able to get there. So that's as far as the target is concerned. On the fund size, I think on the fund side, there are 3 funds which he can retain in the existing fund, but maybe reallocate the amount. Nippon Small Cap, take 8,000 instead of 5. HDFC Multi Cap, again 8 instead of 5. And SBI Contra, 8 instead of 5, which is being invested now. So this will be 24,000, and the remaining 6,000, he can add one large and mid cap, which could be Motilal Oswal large and mid cap, where he can invest 6,000. So 4 funds for his current investment. Like I mentioned, I think these are good funds, but he just need to reallocate the amount to get better results.
All right, Rahul, anything else you want to ask?
That's all, ma'am. Thank you so much.
All the best. Last question of the day. Hemant, we have K. Dheeraj's question via email, and 3 crores in 20 years, Kotak Equity Opportunities, ICICI Pru Large and Mid Cap, Nippon Multi Cap, Mira Asset Large Cap, Kotak Flexi Cap, and SBI Blue Chip.
Well, I think as far the target is concerned, the time is around 20 years. SIP is 14,000, but I don't think he will get to the target there. For getting there, he needs to increase his SIP to 30,000. With the current SIP, he can expect a corpus of around 1.4 crore. So there is definitely a gap, and he should try to increase the amount as early as possible, as soon as possible, so that there is sufficient time for the corpus to grow to the level that he wants it to be. A couple of changes again, I think, keeping the flexibility in mind, which I mentioned earlier. Mira Asset Large Cap, SBI Blue Chip, where he's investing 3,000 and 4,000 respectively. this 7,000 can be reallocated to the existing fund. For example, 2,000 can be reallocated to Kotak Equity Opportunity, 2,000 to ICICI Large and Mid, and 3,000 to Nippon Multicap. So this is how the 7,000, if we decide to stop this 2 SIP, can be reallocated to the existing fund. Again, like I said earlier, it will be easier to get the allocation rebalanced, and I think there will be a potential to get better return over the longer period.
Right. I think that will be all. Thank you so much, Hemant, for being on the show today and helping our viewers with their financial portfolio queries. And time to sign off, but I'm going to leave you with our WhatsApp number and email ID where you can send us your portfolio-related queries, WhatsApp your questions, or you can also email us your queries. Thank you so much for watching. Goodbye.
अब क्या देख रहे हो?